brighter, maybe a bit of a reprieve after the whipsaw of yesterday, currently pointing higher on the S&P evenings by 0.3%. The pound up 0.2% at 130. Oil prices in focus as those US sanctions on major Russian oil producers kick in. Currently $62, below 63 on Brent, down 1%, and Bitcoin below 86,000 right now, down 1.8%. Now some of the stories making the news. On that oil story, US sanctions then coming into effect today. They could leave nearly 48 million barrels of Russian crude at sea. Dozens of tankers have been scrambling for alternative destinations as Indian refiners seek replacement supplies and book oil tankers for cargoes from the Middle East. And a closely watched index of consumer confidence in the UK has fallen on every measure. Research company GfK says its overall confidence level fell 2 points in November to -19. This comes with UK Chancellor Rachel Reeves expected to unveil a range of tax hikes on November the 26th. And the UK will introduce a fast-tracked route to residency for those earning more than £125,000, allowing them to apply for indefinite leave to remain after 3 years. The move carves out exceptions to tougher new immigration rules in a bid to retain top talent while tightening the overall system. And a new report says Brexit has caused almost twice as much damage to the UK economy than estimated by official forecasts. It shows leaving the European Union has cost the country between 6 and 8% of GDP per person over the last decade. The research from a group of experts, including a senior Bank of England economist, has been presented to the Office for Budget Responsibility. Coming up, G20 tensions flare. That's as South Africa and the US spar over what participation really means. More on that next. This is Bloomberg.
Hyundai is on a mission to reshape the future of mobility from Singapore to Savannah. This is Hyundai's global innovation blueprint for smart manufacturing.
We have in Singapore the state-of-the-art technology, and then we export that technology into our metal plant in Savannah, Georgia. It was the largest investment of the company outside of Korea.
The Ioniq 9 is the result of a global ecosystem, born in Korea, tested in Singapore, and built in Georgia.
Ioniq is the greatest example of our success as a company. They've gotten 3 World Car of the Year awards. Thinking from the customer point of view and taking the right decision, the right action, it may cost you more money in the short term, but you are creating customers for life.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Friday. These are the stories that set your agenda. Global stocks head for their worst week since April, as Wall Street sell-off continues into Asia. Growing concerns over US inflation, adding to investor angst about AI valuations. Japan goes big, approving a $135 billion stimulus package. That's the largest since the pandemic. The government ramping up talk of intervention to halt the slide in the yen. Plus, Ukraine's president agrees to work on Donald Trump's 28-point peace plan, despite it giving in to key demands made by Russia. Let's get to the markets right now. And the challenge session over in Asia, the Kospi at one point was down more than 4%. That has moderated to some extent. But the context when it comes to the sell-off on Wall Street yesterday, the biggest reversal that we've seen, intraday reversal that we've seen on the S&P 500 since April, a reversal of 3.6%. The S&P 500 is now down about 5% since its record highs in October. The Nasdaq 100 is down about 8%, close to 8% since its record highs towards the end of October. Today, though, the US futures picture is looking modestly brighter. S&P E-minis pointing higher by 0.2%, Nasdaq 100 pointing up by 1/10. The European session will be challenged. Futures here pointing lower by 1.5%, and the FTSE 100 in the UK set to drop a full 100 points. That is the picture right now. Let's flip the board and have a look cross-asset. Treasuries were bid yesterday. Today, Treasuries are stable at 408. The pound is gaining 0.1% at 130. Brent is falling 1% as those US sanctions on Russian crude producers kick in. Below $63 a barrel on Brent right now. And Bitcoin crossing below 86,000. The cryptocurrency has been something of a canary in the coal mine for this risk-off sentiment. Today, in the session, down close to 2%. Now, to the Asian session, where the Kospi, as I've mentioned, leading Asia stocks lower as a renewed tech sell-off and downs over AI valuations weigh on sentiment. Then let's bring in our Asia Markets Executive Editor, Paul Dobson, who's across all of this for us. Paul, what do you make of the moves that we've been seeing in Asia? How much of this is tied to concerns about valuations and about the AI theme running out of momentum despite the blowout earnings from NVIDIA?
Yeah, good morning, Tom. Well, that's clearly one of the disappointments because the NVIDIA earnings on the surface at least looked to be good, and the market initially responded very favorably to it. The fact that we weren't able to hold those gains even after that does send us a fairly worrying signal and for the outlook for the rest of the year. And if you look at the Asia market complex, you can see it's definitely the tech-heavy gauges that have come under the most pressure here because the Kospi being the poster child for a lot of that. Troubling indeed is the fact that we don't really have a very good reason or explanation for that reversal that we saw in the US markets you were describing. Yes, Bitcoin came under some more pressure again. Yes, that has been a leading indicator, it would feel, sort of by 30 minutes or whatever, for a lot of the rest of risk sentiment in markets in recent days. But no, there was no sort of real obvious catalyst. And yet there we are down again. And you know what the concerns are. We've been rehearsing those arguments now for 2 or 3 weeks about the valuations, about the market, can investors, can governments afford to pay for all the chips that are being booked in advance, and will they be profitable before they're sort of superseded by the next generation of technology as well? Those are the worries, and that's why the market is really having a little bit of a crisis of confidence right now.
What stops the rot then, Paul?
So I think that there are possibilities that the rot could come to an end. Today, in the US, we have options expiries. We've got the VIX at elevated levels. So that's a worrisome spot that we've got to come over. What we won't have is much support from the Fed based on everything that we've seen so far, and the fact that we're still in this kind of data fog. It's pretty clear that the Fed isn't going to be coming in with another cut in December, but maybe next year, maybe that outlook will change. We'll watch how the data unfolds from here. What you do have, of course, is a very stimulative backdrop from the US economy, from the Trump administration, you know, kind of still with plenty of feel-good factor behind it, and 100,000 dip buyers waiting to get in there at the right moment, trying to time that market, still wanting to come back in. You know, that's what the pattern that we've seen all the way through this year. And there are plenty of people talking about the idea this is just a healthy correction and looking for those entry points. So we did get a test of that. Didn't test and fail yesterday, probably you could describe it as. But I would not be surprised if at some point we get to a point where we start to stabilize and then you start to see investors coming back in again, because they like the AI story is still a good story, right? It's still very promising, kind of industrial revolution type narratives that people can latch onto. And the more that you can see that coming through and showing up in the sort of results, the more people will jump on the bandwagon again and want to rejoin the trends.
Okay, we'll watch for those dip buyers then. Asia Markets Executive Editor Paul Dobson. Paul, thank you. Have a great weekend. Let's get to a line crossing the terminal. In the last couple of minutes, there's a redhead on the terminal around the French-based and Paris-listed waste and water management company Veolia agreeing to buy the US firm Clean Earth for $3 billion US dollars from Enviri. So that line crossing in the last couple of minutes. The waste firm Clean Earth to be purchased by Veolia for an enterprise value of $3 billion. Veolia stock on the Paris exchange is up about 9% year to date. Now, there has been a war of words between South Africa and the US over the G20 summit. It has so far been marred by a diplomatic dispute between the two nations over what constitutes participation in the conference.
We have received notice from the United States, a notice which we are still in discussions with them over, about a change of mind about participating in one shape, form or other in the summit. So the discussions are still ongoing.
I saw the South African president running his mouth a little bit against the United States and the president of the United States earlier today, and that language is not appreciated by the president or his team. The ambassador or the representative of the embassy in South Africa is simply there to recognize that the United States will be the host of the G20. They are receiving that send-off at the end of the event. They are not there to participate in official talks.
Well, let's go to Johannesburg now for more on this with Jen Tabasaja, Bloomberg's chief Asia Africa correspondent, I should say. Jen, what is the latest on this spat? What underpins this spat? Running his mouth? I mean, my goodness. What is behind all of this?
Yeah, it really is, Tom, as you were saying, a war of words, it seems like, and really sort of at this point in time, as we get ready for the G20 summit to officially kick off, seeming like it is the focal picture. We were actually in the room last night when President Ramaphosa was standing next to Antonio Costa and also Ursula von der Leyen, seeming to at least focus in on their trilateral relationship and the importance of that relationship. And then we started hearing some indication from President Ramaphosa that it seemed like at the 11th hour, the U.S. was potentially going to participate in some fashion. Our understanding, though, that it is in fact potentially an official, a U.S. official that will be there for the official handing over of the G20 to the U.S., which of course is going to be holding the presidency in 2026. But really, it is sort of overshadowing a lot of the excitement that's been here over the past few days as we've had this Business 20 Summit, the B20 Summit, and many people were focusing in on the fact that even despite the U.S. Leader not being present here, there still is a lot of unity that they were at least trying to at least put forward for the most part in cooperation and unity on the fact that many of these countries do share a number of priorities. But it's seeming like still, despite President Ramaphosa not wanting to make this about the bilateral relationship between the U.S. and South Africa, it is seeming like that is still a part of the discussions. The big question that we have here is what is going to be the ultimate outcome of the G20 summit. We reported earlier in the week that the U.S. had said, had to a certain extent threatened South Africa with coming up with a declaration, a joint declaration at the end of the G20 summit, because the U.S. has explicitly said they are not on board with some of the priorities that South Africa has made for this G20 summit. So what, if any, consensus will we see at the end of the G20 on Sunday? And then what does it mean for the U.S., which is holding the presidency next year?
Okay, Bloomberg's Jennifer Tabasaja on the ground for us at the G20 in Johannesburg. Jen, thank you for that update. Jen will be speaking exclusively with the CEO of Business Leadership South Africa. That's at 9:30 a.m. London time. Meanwhile, President Trump has called for a group of Democratic lawmakers to be put on trial and even face the death penalty after they released a video telling the military and intelligence community to disobey orders that would break the law. In a post on Truth Social, Trump described it as, quote, seditious behavior at the highest level. The Democrats who appeared in the video called on Americans to, quote, condemn the president's calls for our murder and political violence. Switching focus to Europe's most valuable company, ASML. Shares called lower by 4.2% on Tradegate versus the Amsterdam close. Not a big surprise given the sell-off on tech that we saw yesterday in the rout on the Nasdaq 100, because, of course, we do see that often a linkage between any pressure or any upside when it comes to the tech theme in the US, and ASML is caught up in the drift. The stock is up about 33% year to date, but it's called lower, pretty significantly lower today. Again, the most valuable publicly listed company in Europe. That is a stock for you to watch in the session today. Now, when President Trump rolled out global tariffs in April, economists braced for the worst, including higher inflation, of course. But so far, the price hikes forecast have yet to materialize. Bloomberg Originals has been investigating why.
Credit where credit's due, President Trump made a big bet that the US had a magnetic appeal, and that would enable him to get a better deal from US trade partners and companies that want to do business in the United States. On the evidence of the last few months, that bet is playing out pretty nicely. Economists don't agree on much. One thing they do agree on is that free trade is good and that tariffs are bad. For a moment, Trump escalated US tariffs on China all the way to 125%. If you plugged the US tariffs into a model of the global economy, what it said was that there was going to be a really significant drag on growth, and there was also going to be a significant upward impulse to prices. But when we look at what's happened to inflation over the summer, it's not come down, but it's not come up either. Why is that? It's because US importers and foreign exporters saw the Trump tariffs coming, and they rushed to front load, shipping to the United States before the tariffs could come into force. One thing that's happened is that we've gone from a lot of unexpected bad news concentrated on a single day to a series of country-by-country deals. They're something of a Swiss cheese of exemptions and carve-outs. The trade war is a drag, but it's not the only thing which is happening. We've got tax cuts with Trump's one big beautiful bill, and we've got a bonfire of regulations which is stoking the animal spirits of US businesses. We've also got the artificial intelligence boom and a huge amount of investment going into data centers. Tariffs are having an effect. China's exports to the United States are way down relative to the historical trend. So, who pays for the cost of tariffs? Despite his well-known love of gold, the president is not an alchemist. He can't make something from nothing. That money has to come from somewhere. All of the evidence so far suggests that in the end, the bulk of it is going to come from US businesses and US households.
Well, subscribers can watch that documentary right now on the Bloomberg terminal and on Bloomberg.com. Coming up, we're going to discuss the global spike in GPS jamming incidents with the CEO of the satellite company Iridium Communications. That is next. This is Bloomberg.
Discover the power of active fixed income ETFs from the world's leading active ETF provider. With 16 active strategies to choose from, we are the home of active ETFs. Search JP Morgan Fixed Income ETF.
Now, you've written that younger people today are not as happy as their parents were.
That's correct.
That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness has been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Now, you may remember that back in September that a plane carrying the European Commission President Ursula von der Leyen was affected by GPS jamming. Data suggests there has been a sharp rise in the number of GPS jamming incidents since early 2022. To get a take on this and the broader industry, let's bring in now Matthew Desch, CEO of the satellite company Iridium Communications, which compiled that data. Matt, just talk us through the kind of the spike that we've seen then in GPS jamming, and do we put most of the blame then on Russia for these incidents? What's the significance and what's the historical context?
Well, GPS has been around for many years, and unfortunately, it's the core of all of our digital systems right now. We know it navigates us to place, but people don't realize that your cell phones wouldn't operate without it. They wouldn't connect to a cell tower. Your data centers wouldn't operate. The stock exchanges wouldn't operate. But GPS is a very faint signal from space, and unfortunately, it's kind of easily jammed and spoofed and other things. So, you know, we invented a technology that's on our network that's a fix for that.
Well, talk to us about what that technology is, Matt, and what kind of appetite you're seeing then from consumers and your customers.
Yeah, with the rise in, most people know Iridium as a communication company, of course, a personal communication company. We've been in operation 27 years, but we realized our network had a very strong signal that if we sent timing information through it, we could be able to be a reference signal, an alternate really to GPS and Galileo kind of systems. And with the acquisition of a company called Satellus last year, we now have the first truly global answer to GPS jamming and spoofing. And it's going into ships now, it's going into cell towers, it's going into many things. And now that we've miniaturized the technology to a tiny little chip, you can go even into consumer devices and many other things. And so, you know, unfortunate jamming instances like the one you experienced, those things are going on across Europe. It's certainly around Ukraine, around Asia. They're increasing in frequency because people realize how much of the world depends on timing from GPS, and they're looking for solutions right now.
Are we closer, Matt, then, to given this technology change and what you're offering, are we closer kind of to an environment where most of us will be getting direct satellite to smartphone connections? Where are we in that journey? What are the opportunities there?
Well, that's another area of growth. I mean, space is quite exciting right now with all the investment going on. Many of us are working to innovate to, instead of making connections to purpose-built, expensive, large devices, we're looking to embed our technology from space straight into smartphones or into all the Internet of Things devices that people have that track animals, monitor assets, vehicles. With the world going autonomous with vehicles and drones and that sort of thing flying around the world, you can imagine you want to do that inexpensively, and you also want to protect where those locations are. So a number of us are investing in that. Iridium is delivering what we call Iridium NTN Direct. We have mobile network operators who are signing up to roam onto our network when you're out of cell phone coverage. A lot of people don't realize cell phones only cover about 10% of the Earth's surface.
Oh, just 10% of the world's surface. Are you overly reliant on SpaceX and Elon Musk to get your satellites into orbit, Matt?
Well, we were one of their first customers, and in fact, one of their largest commercial customers. Fortunately, our network, our second generation network, is in space. It's one of the reasons why we're so profitable and generating so much cash right now, because we're not having to launch new satellites. In fact, we have a fairly new network right now with a long life ahead of it, and fortunately, it's very programmable. And so that's how we're developing standards-based 5G standards directly into our satellites, so we can talk to the devices that people own and enterprises depend upon.
Okay, Matt Desch, CEO of Iridium Communications. Thank you for taking the time. Let's switch focus to what's happening in the AI space then. More updates, of course. OpenAI partnering with Taiwan's Foxconn to design and manufacture hardware for data centers. It marks the latest move by OpenAI to meet its growing need for infrastructure to support AI systems.
To keep pushing the frontier, we need to build these new types of AI infrastructure hardware at scale, and I'm excited for that to happen in the US and with Foxconn. Foxconn's experience building complex infrastructure and hardware at massive scale makes them the ideal partner for this, and I'm looking forward to exploring together what this can look like. We'll share insight into emerging hardware needs across the AI industry, and Foxconn will use that to design and prototype new equipment that can be manufactured in America.
Okay, that, of course, the CEO of OpenAI, Sam Altman, on that tie-up with Foxconn. There's a lot more coming up. Stay with us. This is Bloomberg.